Hey guys, this is Market Update. In this video, we've got a new research report from Binance, just some key data points here that I want to look at. And then in this video, we're going to go through some of the longer term aspects of this trade, which is the crypto trade, specifically Bitcoin. We will not get another trade like this in our lifetimes. This is the only one. We have to take advantage of it because the next move for Bitcoin is now a top 10 asset, number 9 ahead of Meta. It is not something anyone could ignore at this point. The next move potentially puts us top 5. Now, when you have a top 5 asset in Bitcoin, it's still young, it's still being integrated into the wider investment world. This is something everyone in the world cannot ignore. And so this is the one-time trade of our lifetime to get into. So we have to make sure we're ahead of the herd. Bitcoin is still consolidating in this incredibly boring, choppy range. We've had, I think, about 4 months or so, 22 weeks of just sideways action where the price literally hasn't gone anywhere. We've come up to range highs, range lows. We've literally just gone nowhere for all of this time. It's the summer. Things aren't going to really happen unless some major news event comes. But the real investment flows usually happen in winter. Okay, summer, everyone's on holidays, investment managers aren't deploying. So it's just what it is. It's chopping everyone up. It's summer trade. Come back in winter if you want to see the next big move. We've got the Fed essentially saying we're going to cut rates in September. You have that whole entire rate cutting cycle ahead of us. So that's what we're looking forward to. If you want to get set up on Bybit, before that happens, check the link below. You can get up to a $30,000 deposit bonus on Bybit via that link. Also, if you want to trade on Apex as well, which is Bybit's decentralized exchange, you can trade on there as well, but only for day traders and speculation trading. Coming to some data in the latest Binance research report right here. This is total crypto market cap. You can see most of the gains came over the winter that we've just had. And, spring, summer, just a consolidation. Just totally normal price action. But what I want to focus on really here is that you've got savings that you want to invest in crypto, right? You've got some money that you want to invest in crypto because of the returns that it's giving us. So as we know, the annual rate of return right now for Bitcoin, if you just dollar cost average Bitcoin, is around 60%. I think it's running at right now, right? And then we can map that out over the next decade or so. It's going to go from 60 to 50, 40, 30, right? It's going to settle around some amount. So the annual returns that we're getting from BTC are getting crushed as the asset grows. That's totally normal. But really the question is, what outperforms that from a risk-adjusted standpoint, right? If you can be fairly certain that this asset is being brought on at a big scale, which we know it is, right? Because everyone wants Bitcoin. Everyone's saying, we're bringing Bitcoin on. It's becoming institutional. You're seeing Cantor Fitzgerald bring it on and saying, this should trade everywhere. We're bringing it on. We believe in digital capital. You're seeing all the banks wanting to get involved as well, and all the large institutions in the States who are recommending to put digital assets, basically Bitcoin and ETH, right? Because they're the ETFs, as 1 to 3% of a portfolio. So this is going to continue to be adopted. That is not something that suddenly changes. I'm talking about these long-term flows, right? Yes, short-term price goes up, down. Not that. It's the long-term flows where people want to bring this asset on. So that reliability of investing in an asset plus the returns that we're getting at 60% a year, that is going to come down. How can you outperform that from a risk-adjusted standpoint buying altcoins? Because loads of altcoins are going to outperform over cycles. Most of them don't over the longer term though. So what you have to do is take massive amounts of risk short-term in cycles, making sure that you're going to outperform BTC. Like YOLOing your entire net worth into these internet coins, which have, high risk, right? Their business models may not work out. And then trying to YOLO in and out and roundabout, right? So it's just, the risk of that is insane. Just trying to get some return over and above what we know is solid as a rock, being brought on and returning 60% a year, right? Because some altcoins outperform. So you have a portfolio of like 10, 15 altcoins. How are you going to manage that? It's ridiculous. You don't know everything that's going on through 10 to 15 altcoins. Then some outperform and some don't. So the blended return you get from all of that risk and all of that complexity, is that enough to actually outperform BTC from a return standpoint? And it certainly isn't from a risk-adjusted and complexity standpoint. That's what this trade is for me. So here we have Bitcoin market dominance. And as we know throughout cycles, Bitcoin market dominance kind of goes in these flows where during the first part of a bull market, Bitcoin dominance goes up like this. And then towards the latter stages, you see Bitcoin dominance start to tip out, kind of, start to go down again because The latter stage of a bull market is where Bitcoin's priced all of it in and it's looking forward to the next bear market because of Bitcoin cycles and the macro cycle. But altcoins typically show us that late stage bull market. That's great because everyone gets euphoric and everyone's seeing these big gains. That is typically the riskiest time to buy altcoins, of course, which is when new entrants buy those altcoins and the cycle repeats itself. So as a long term, I'm saying 2 cycles here, which I think is the trade. The trade here is the next decade of Bitcoin just becoming what it's supposed to be, everyone bringing it on. We actually have an advantage here because we can move our capital quicker than these institutions. All these institutions are saying, we want it, but we just can't bring it on right now because we have to go through all these slow processes. That's the trade that we're in. And that's the least risky trade in crypto, compared to everything else. What I think will happen is a bifurcated market where you have Bitcoin and ETH, which are now in the ETFs and they're being sold institutionally. And then you have everything else, which hasn't met that mark yet. Some may do, right? And a lot riskier, but others are essentially uninvestable, even though they're like pretty good projects. And I want to talk about this because it's important from an investment standpoint. Something like Ondo, which is a real world assets, essentially US treasuries on the blockchain, a huge growth area, right? Great project, put together well, and a great product. However, when you look at valuations, this thing is trading at $1.2 billion valuation, fully diluted. It's valued at $9 billion. That is insane, and it's the wrong valuation. Circle, who have one of the best products in crypto, USDC, huge growth area also, and they take all of the treasury yield, so they're printing money. They want to list on the stock market, and I think the latest valuation was about 5 billion. So you have Circle themselves, which is a much, much bigger company, probably much more important in terms of where they sit, coming onto the stock market at 5 billion. You have Ondo, fully diluted, valued at 10 billion. The valuations are wrong. So when you're investing in this, during a bull market, it's actually quite bullish because you have a very low floating market cap, a very low amount of coins. That means you can get huge volatility when prices go up. But of course, that works the downside as well. But if you're investing in this, looking at Bitcoin dominance and saying Bitcoin dominance is falling, you're looking at market caps versus Bitcoin and not price. Something like Ondo, and this is representative of a lot of coins, can increase their market cap substantially and the price can go nowhere, because you're bringing new coins onto market that are increasing the market cap whilst the price could potentially just go nowhere at all. So comparing market caps is a stupid way to do things. You have to look at the valuation of each coin individually. If it has a high fully diluted valuation, how is it investable right now, maybe in the future? So that's how I see things. Investing in altcoins, you can make very quick returns in a bull market because you have low float of coins, so they can move very substantially. I'm talking about putting an investment portfolio together where you're trying to actually reduce some of the risk and have something for the long term, where in 8 years you can look back and say, this thing is solid and reliable, producing good returns for my portfolio. So that's the way I see it. I think altcoins are mostly too expensive. And, yes, they can perform over cycles, but you have to take way more risk. You have to be way more active. Whereas BTC, we know what the trade is. The trade is that this thing is coming online. It's already a top 9 asset, and potentially it's going to be a top 1 asset. And that's the thing. In the top 10, nothing else has a potential 10 to 15x in it, inflation adjusted. Right? All the others are going to be battling out, but none of these has a potential 10 to 15x versus the others, right? Only BTC that could potentially do that as world money, store of value, instead of all these tech firms. So that's where I see it. It's a risk-adjusted trade. I can't see anything else risk-adjusted that has, this discrepancy with, we know what's going to be happening. And even if we're out by like 50 or 80%, it's still going to be the best performing asset if it actually just matures into what everyone is telling us it will be. Bitcoin and ETH are some of the best performing assets in the world this year. The Binance report left out Nvidia for some reason, obviously because it's outperformed both of them. So they don't want to put it at the top, which is kind of weird, right? Why would you not put Nvidia there and just give people the truth? But in any case, I put Nvidia here, 120% this year. So it's outperformed Bitcoin and ETH. However, it's one of the best performing assets, right? So any logical investor, I'm talking about big firms here, pension funds are starting to get involved with BTC, other types of firms, family offices, look, they're all into crypto. They're buying Bitcoin and ETH, right? They want in on these assets because they have growth. You can see that over and above others. So they are just a part of portfolios. That's it. 1 to 3% in crypto, whatever. Yeah, put 1% of the portfolio in, doesn't matter. We're not at 1% yet. We're an order of magnitude away from that. 1% of world wealth puts us much higher, right? And so when we're looking at performance, it just has to be part of a portfolio. Even if it's not the best performing asset in any given year, you know there's a lot of growth here. You know it's coming on. It's one of the assets that you have to have in a portfolio. So it's not, oh, I don't want Bitcoin. Everyone has to get this now. It's one of the best performing assets. It's one of the largest assets in the world. You cannot not own it as a hedge fund or a family office or anything else. You can't not own a top 10 asset. Everyone has to come on board. And we have the advantage because all of these institutions have different lead times. So they're doing their due diligence and all that rubbish, right? Yeah, good. Do that for another 5-10 years while we're accumulating this asset. Please, like, be slower. So that's the trade that we're in. It's one of the best performing assets. And over the long term, it's going to outperform most other things as money comes in my opinion. So that's where we are. You have to own some. That's it. And so our advantage is being able to own it before these institutions who want to own it but have to go through all these processes. Ultimately, what Bitcoin is digital capital. And it's really, really important, right? Because is the world becoming more digital, right? Do we need digital capital? Very clearly we do. Product market fit, if you want to call it that. People understand this thing is digital savings, digital capital, digital money, whatever you want to call it. Every single large institution is now coming onto this saying, that's what it is, digital capital. We get this. What else is capital that we use? We used gold, but really more it's housing. Right, housing is our savings account, is our capital. So people inherently know that housing, goes up in value, right, in the currency terms. So people inherently know currency, you can't save in that. It's going to lose value over time. If I can get on the property ladder, that's going to be better for me. Property goes up in value over time. Property doesn't go up in value. It doesn't go up in value. It doesn't create value because it's a depreciating physical good, just like many other things, right? So it costs a lot of money to upkeep it. You have to insure it. You have to spend money on it. And it's going to degrade over time. Property can go up in real value if there's a big surge of population in an area that drives up prices, then that can happen. But over the long term, over an entire economy, property, the real estate sector, it doesn't really go up in value over and above the rate of currency debasement. So this is money supply per capita. And you can see that home prices track this more or less, right? So you can see a big, huge surge in prices for housing in 2008 and then a big crash. And then since then, money supply has actually gone up, above this, but you can see they're correlated and the delta between them is more or less the same. So essentially, house prices price in the expansion in money supply, but don't really make you money in terms of over and above money supply growth. You can see down here, this poster says gold up 60% in 5 years, home prices up 60% in 5 years. So in real money, what we call real money, hard currency, house prices don't make you any money, but they do certainly protect against currency debasement. You can see the same thing here. It's the same chart, right? So very correlated here. As M2 grows, as money supply grows, then house prices price that in. It makes sense. So in a digital world where the populace is only becoming more digital, digital capital makes sense. 1% allocation puts us much higher than this. So we are in a very special time where you have something very simple, digital capital in a digital world as we move further and further into the digital space. Digital capital, savings account for digital accounts makes sense. Then that's going to make sure that it prices in currency debasement over time, just like housing does, just like gold does over time. But gold's got 2% inflation, Bitcoin doesn't, or it will come down to 0% inflation eventually, right? So the future is digital capital, just like houses, just like gold, some percent of world wealth, even a tiny percent, even 1% of world wealth. We're an order of magnitude below that right now. 1% of world wealth, huge increase in the growth of BTC, and we're in an adoption phase. So you have a thing that inflation adjusts and currency debasement adjusts, digital capital, digital savings account, with a 10 to 20 year adoption phase ahead of us. So It's the trade of our generation. There's nothing else with this risk-reward ratio, in my opinion. One day, Bitcoin will be a mature asset and it won't produce very much in returns, just like property or gold doesn't produce much in returns. But it will inflation adjust, and we're in a massive adoption cycle. So that's the opportunity that we have. It's only going to happen once with BTC. So if you do trade, check out Bybit, deposit bonus down in the description. Crypto investor course, I'm going to put the price up this weekend. I know a lot of people wanted to get in, so check the link below. This weekend, the price will go up. But if you're in at the original price, all updates are free of charge for users forever. So check the details via the links below. I'm James, this is Manzi G. Cheers for watching, and I'll see you in the next one.